Good morning, bon dia, buenos dias, bonjour, guten Tag, meine Damen und Herren, and hello from Chicago at 8:02 a.m. My time here on Friday, the 15th of January, 2021. Thanks for joining me on episode number 1918, which I guess the cat wants to be a part of. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as we turn our heads towards the convergent trading pre-market summary sheet, we see that allocation is away from risk. We have a risk-off overall posture in the overnight session. The selling continued a little bit farther. Note that the Russell's leading down as the Russell was leading up throughout the last couple of weeks since the beginning of the year. So we're about to close on the second week of the year. And we're moving out of that balance that we've been in the S&P for some time. Again, allocation moving out of equity indices back into some of the treasuries. Looks like the 10-year and the 30-year are receiving some, the dollars receiving some, and there you have it. The overnight session, 244,000 with 81.2% of the overnight inventory short, 32 and a half points, and balanced. How's this sound? Am I coming across pretty well? I've flipped between my office and my home office, and just the stuff changes all the time. So, what's on deck for today? So again, the stimulus is in play. JP Morgan profits jump on trading, investment banking strength. The expectation was the banks are going to report profits that are much lower than last year, this time before the pandemic. Trump administration takes final swipes at China and its companies. Germany surpasses 2 million coronavirus cases, death rate up. Eyes on Pelosi as Trump impeachment trial timing up in the air. And that's where we stand coming into today. What are we looking for? Business inventories this morning. We did have some numbers, some key numbers. We had retail sales, which came in worse than expected, negative 0.7% versus 0%. Retail sales ex autos came in even worse, negative 1.4% versus negative 0.1%. PPI month on month came in a little bit lighter, 0.3 versus 0.4. We have industrial production and cap utilization here in about 10 minutes, and then we move on to business inventories at 10 o'clock, expecting 0.5. Michigan prelim, this is a mover. Also at 10, the expectation, the consensus here is 80. Michigan consumer sentiment prelim. Expectations 80 at 10 o'clock, and that pretty much wraps up the day. So that's where we have it, okay? Let's jump into our review segment. So yesterday, the primary idea is because we were breaking higher than where we were. Remember, we've been contracting here over time. We were breaking higher and staying above 1800, and the expectation is we would pull back and start to squeeze through the 38.17 area and push potentially towards 38.32. That was the primary expectation. If we do so, we have initiative buying, not initial balance, initiative buying. And in this case, we do not want to be short if it breaks above that 17 area. We do not want to be short. And then the secondary is a test up into the 15 area or so, and then we see an impulse down, and then we chop at the 3803, and then drop back through to the 95, to the balance of 95. Once we get into 95, likely choppy and go sideways. This is the responsive selling uh, uh, approach. This means the market is actually still holding on to balance and is responding back. And balance again is down in the 95, 94, 95 region, right? So let's see what it actually produced. Here's what we produced yesterday. We opened up, we were in complete chop on the open, completely sideways, open auction in range, out of value. Then we finally break higher, remember that 15, and then I was looking for, okay, do we push then through the 17 and start squeezing higher, or do we come back with an impulse, hopefully, as you can see here, not quite. Do we come back with an impulse so that we can start targeting that 95 area right here? This is 95. That would be scenario 2. Took it forever. Chopping back and forth, back and forth, back and forth. Right after the webinar that we were part of yesterday for the Trade Right campaign initiative, then it finally broke to the downside. Don't pay attention to the delta here. There's something going on with the data, something that that IQ Feed is working on. It looked like there were no bids, no lifting at all, and so the delta was fully negative for a period of time. I don't know what's going to happen with that range of data, but I don't believe that this is correct based on my footprint chart. So we just basically sat here. Remember, the initial balance is this blue dashed line. That's the first swing high, unconstrained by time. This is not the opening range. Opening range is based on time. This is based on the first time sellers step in, so the first swing high and the first key swing low. It's somewhat subjective, but overall, those numbers were 38.12.75 and 38.06.75. So we had a 6-point opening swing in which a lot of business was done. And then later, we were stuck in this range forever. I mean, this is like a massive zipper here that we finally broke out of. And I've been talking earlier this week that, hey, we're really compressing. We're expecting a big move. And the sense, the expectation given the market action is that this move is likely to be to the upside. Given where we were opening, the expectation is all the shorts that had 95 and the region around it as value, all those shorts will likely have to spit them out as we start to move higher, and we look to take advantage of that by being long away from value. And the market said, we're going to come right back into value and hold steady here. We're currently trading at 37.70, so we extended the selling even farther down, and this is why risk off, we see this as risk off sentiment. Yesterday left us with a double distribution profile with a clear demarcation at 3800, 3801 right here. You can see the mid is 3801 quarter, and 3800 was retested right here, this double top, and it failed. So we're looking short side, prioritizing short side this morning, and that's where that stands. So what's going on here? So that brings us into what we're doing today. So today we have 261,000 contracts. This is relatively high compared to the rest of the week for the overnight session. So this is higher than what we would expect for a normal day, for a common day for the S&P. So there's a fair amount of activity here, expecting the open to be relatively active. We expect what the overnight session to do has done to carry over somewhat into the open, and that gives us a bit of an indication of what the market is looking like. we dropped through, and then we remember that 38 3781, 3781, 3781, 3781 area right here. Well, we pushed into it, pulled back, fell through, pulled back to the 3781, and are holding below it. This is a stock zone area, well-defined structural area, and so I'm going to pay attention to how it treats that 81, because the range we've been stuck in is 81 to about 04, really 38.10. But that's basically the range that we've been doing a lot of business in, right in here, like that. Okay, and then the bottom side of this is right in here. So as you draw lines, oh, I sloped it down. As you draw lines, you start to see where the action is. With 95 having the most volume in this region. And so we are below it, and we have to weigh that in pretty heavily that we are below this 81 area, and so we need to favor that side as the market moves from the upper balance zone to the lower balance zone. I'll show you that in the daily. Where's my daily? Wow, this is so bright. So here you have it. This is the 81 area right here, all the way to up here, the 04 or so. And you can see there's a concentration of volume last week and this week in this region. And we're moving away from that concentration of value. That is the 37.95. Important area to note, and we are falling below it, and we're moving into the next region with 68 being the low of the week. Okay, so we're looking for what it does here as it heads towards the low. The low overnight was 65.25, and we want to see, does it then get into the 53, 57, 53 area and start to hold down here? If it does, then we have a really good shot at 36.94. 36.94. So as the market dumps money into treasuries, as the dollar gets bought up, as money comes out of the small caps and so on, and the Fangman stocks continue to weaken, we are likely to see this 36.94 area. It makes it more and more likely that we would move down there. So just be aware of what we're moving out of. Remember, the market trades, goes from balance to imbalance to balance to imbalance, and until it reaches an extreme where prices are too high, then it moves into the prior balance and then continues to seek the other way depending on what news is happening or whatever. So knowing these boxes is really important. These aren't Darva's boxes exactly, but they're breaking up the action into these boxes is quite relevant. So here, 37.15. You have a box at 53 to 57, and then you have kind of a gap zone, and then a box up here that we've been a part of for the last 6 sessions or so. Okay, so the question is, does it slip through here? I expect it to pull back to 53 today. Does it slip through and hold and come back into this upper box, or does it slip through and fall and move into this next box and bring us back into this 37.20 area? That's the next key figure down here, 37.20. And if it does it continue to slip through and move into the lower box, this big box? In which case we would look for the point of control at 36.94. You dig? So that's what's happening there. Today is that day of the week, folks, where we asked you to take a moment to just geolocate yourself, so to speak. Let everybody around you know where you're located. It is Friday. Let everybody know where you're located. Just type in your city, state, or slash province and country, and that way people can kind of look around. It'd be cool if you're on Twitter to include that, so if somebody wants to get a hold of you, they can get a hold of you. Do not share phone numbers or emails, because this is accessible by the public, by robots, and can definitely fill you with spam and spam calls and so on. But if you want to get contact, if you see someone nearby, asking for their Twitter handle or some public handle, and hopefully you can connect. Unfortunately, we cannot connect as people physically, but at least you can set up a phone call, maybe find a trading partner, an accountability buddy, or something. So just wanted you to do that for a moment while I move into the review segment. Here we go. So let me set up my charts. And those of you who are considering brokerage, I would really appreciate your support at edgeclear.com. 22-cent commissions and now 10-cent Rhythmic fees. The transaction fee for Rhythmic is normally 25 cents. It's 10 cents at EdgeClear, combined with 22-cent commissions on micros. I believe this is this goes a long way to help traders keep costs down. So let's take a look at what's expected for today. After that shameless plug, we're building a lot. So here we are right now. Oh, one thing I wanted to show you. Just to simplify things, to break things down a little bit. Here's the market profile chart of what I was just speaking of. What we're doing is we're trading down in the 37.70. So we're trading down here. Let me change the color of my pen. A minute. We're trading down here. Okay. So you can see that we've already taken out the low of this day, the low of this day. So we've been in one-time framing up since last week on the daily, and what we did is we built nice, some nice value up here. The combined value extends like this. That's what I just talked about with 95 being the high number, and we are currently trading at 37.70 or so, and it's got very little below it. So if you look at the profile, this profile here, there's very little going on there before we move into the next big area. This is why I believe that the 53 test is likely to come today. Unless there's some reason for buyers to come and support this. But we've broken several lows here and are starting to have ended the one-time framing up, which yesterday was confirming but has failed. And so just pay attention to the big picture as we head into this next big area. We do get 37.20 as the next big test. Here's an extended view of where that stand. We had that big gap, and so this is really the map, kind of the big picture map. And I want to make sure that you as a trader are not getting too caught up in the day-to-day or minute-by-minute charts that you're forgetting what the overall market's accomplishing. So this morning, inventory is very, very low, as indicated by the Convergent Trading Summary Sheet. The Convergent Trading Summary Sheet, inventory is on the short side, about 85% at this point. And so I'm looking for a market that reverts back to the overnight point of control. So I'm looking for some sort of a squeeze back to 77, potentially to 81 again, 81. And then consolidating down here, we're opening in a gap lower, and I'm looking for it to turn over with an impulse and attack this low and start moving towards 50 through the 61.50, which is which is where this bounce is expected to be, and then start moving towards the 53 area for a bounce and a potentially 47 before we come back to rest. Don't forget that Monday is a holiday, so we have to temper. This is a lot given that Monday's a holiday. Monday's Martin Luther King Day. The markets are open till noon Central, 1 Eastern. So what this might create is a situation where the market may go into a pause relatively quickly, but left to its own devices, I expect that any failure to push back above 81.82, again, 81 has been in play, 81.82. Anytime it fails to push through, then we're expecting it to extend to the downside. So if it pushes to 81 and it looks like it's basing for another run, I would more likely expect it to fall back down through than for it to rise back up. The secondary is an open auction that remains here, attempts to push lower, impulses up back into the 81, consolidates here for a while, and then starts to squeeze for the gap fill. The gap low from yesterday, the gap zone low from yesterday's 86 and a quarter, just 5 points above. Consolidate here and then get back into line with the 92.95 area, back into balance and to touch the close. That's the secondary scenario. It's just I want to highlight the numbers, but there's already a lot on the chart here. So the key elements to watch for are: how does it treat does it test 81.82? If so, how does it test 81.82? Is it push through or does it get rejected? And we have scenario one. We're going to look for a break of 75 to 61, a push to 53, and then potentially a push into 47, which is quite ambitious, not really expecting all that much to the downside. Or does it push into 81, hold, or put in a weak high there, only to squeeze to 86, which is yesterday's low? And then from there, if it holds the 86 and stays above the 81, then you're looking for longs. I'm looking for longs into 92 and then back into equilibrium at 95. Okay, and that's basically buyers defending the market. I know we went long here. Good luck, and I'll catch you on Tuesday. There's no trader bite on Monday. There's no sense doing one for a short day. I'll catch you on Tuesday morning. Enjoy your long weekend, and make sure you mind your risk first and foremost. Good luck.